Okay, we are officially live. Here we go. We're here, baby. Welcome back to another market open. Time to tweet this out into the world. It's Wednesday, live market open, Wednesday, 11/23/22. It is Wednesday. What is Wednesday? Wednesday, the 21st. We are here on the 21st. Let me just put this out on Twitter. Hello, everybody. Thank you for being here. It is another day, another market open. We are getting very close to Thanksgiving, and I'm excited. Wow, 26 people already. Thank you so much. Amazing, amazing stuff. We are here, baby. Time to analyze the markets. Gabe, by the way, we have our Patreon call today. So you have to make sure you're there. Let me know 9 p.m. or 10 p.m. which one you want to do. Let me know. Hey, is that a mirror in your pocket? Emmanuel, what's up? Jason, what's up? Richard, Showcat first. Miyoko, thank you. Richard, Blake, Sonam, Felicia, what's good, everybody? Thanksgiving. Here we go. First of all, I would like everyone to comment what they eat for Thanksgiving. What's their favorite? My favorite is mac and cheese. I'm a bit basic, okay? I'm a bit basic, but I like the mac and cheese. Felicia says red is so your color. That, you know, it's funny. I used to have a red phone case right here, right here. But I choose to live life on the edge, which is why I got rid of it. Like, I literally, it's been almost 2 months. I don't use it. I just believe in taking risks. I asked Tristan yesterday. I was like, "Yo, why don't you do the same as me?" He's like, "Because I'm not stupid." I was like, "Okay, fine, fair enough." Vegan mac and cheese and soft meat tacos for husband. Wow, I love that. Yeah, we don't eat like turkey in my house. That's not a thing because we're not American and stuff, and I never really liked turkey. But mac and cheese, I love. I like ribs though. I like those. So Tristan, actually, for those who don't know, he's my videographer. He's going to come over for Thanksgiving dinner. So it's going to be more than just me, my dad, my sister, my mom this time. We'll have a guest over. So that'll be nice. Thanksgiving is a great time to, if you actually celebrate it, to just reconvene with your family, have some of those moments. I had some great Thanksgivings when I was little. And, things get older, you get more stress, all that stuff happens. But at least for that day, even though I can't stop thinking about work, you try to just like be grateful for that moment because you never know, man. Those people, it's important to have those moments with people. All right, let's get into the market. We've got things in the pre-market going okay. Everything's up in the pre-market, but not massively. There's some things that are down, like Netflix, Tesla recovering a little bit at 173, up 1.97%. Pre-market S&P has stayed stable at 399. We'll see if it crosses the 400s today or if it continues to take a leg down, but it's really been stable from 395 to 399. Warren Buffett has sold 3% more of his stake in BYD. He went down from 18% to 15%. Again, it begs the hypothetical question. Tesla now, its market cap is $536 billion. Apple's market cap in 2016, when Warren Buffett bought in, was $500 billion. Apple has 4x since then at $2 trillion. I think we all think Tesla's going to 4x, right, in the next 10 years, and Apple did it in about 4.5 years. I think we could imagine Tesla 4xing in 4.5 years, or at least 5-6 years. So maybe there's a world in which Buffett buys in. Probably not, but it would be cool to see if that happens. Twitter is so much fun. That is true. Homemade Indian foods are delicious. I agree. U.S. Thanksgiving is so much more hype than Canadian. That is so true, man. U.S. Thanksgiving is like a legit operation. Let me also just put this in the Discord that I'm live right now. Forgot to do that. But yeah, Thanksgiving at the end of the day is important. Here, live market open. Okay. So what else we got? Good morning, Mick. Good morning. Thank you for being here, Cameron. Curry goat. Okay, not bad. Curry goat is not bad. Zoom also had its earnings. I believe I went over them yesterday. But it's down about $76. Again, Kathy Wood sees this company doing $45 to $70 billion of revenue. In the bear case, $700 stock by 2026. Base case, $1,500 stock. I did a video on it yesterday trying to analyze how she got those numbers. And even if you take into account enterprise sales, even if you take into account 200 or half of 240 million people paying $15 month over month, it's hard to attach a $70 billion revenue argument on Zoom. In fact, she was on a podcast yesterday where someone said, hey, when is the metaverse coming? And she says, we're already in the metaverse. It's Zoom. I was like, bro, Zoom is not the metaverse, my guy. Zoom is a video. Zoom is FaceTime on steroids, which is a great app. I pay for it, but it's not the metaverse, bro. I don't know if it's the metaverse. So that was Zoom's earnings. SoFi has declined massively, hitting a all-time low at $4.60. Student loan crisis is hurting the company. Obviously, Biden extended student loans, so we're not going to have to refinance them until 2023 June, which means the next 6 months of that revenue is gone. So SoFi, and they've been doing a good job finding revenue in other areas, right? They've been really adapting as a company, but their ability to try to find that revenue now, I think, is going to be one of the core elements of their success, and if they can basically weather through the storm. Quarantine Quartet, good morning. Samuel, good morning. Zoom EPS beat was massive. Yeah, but EPS, no one cares about that, right? Like being EPS by 27%. If they beat revenue by 20%, oh my God. But EPS is like, no one cares. The only people that care about it are like people on Wall Street that really are just like so minuscule with this stuff. Thank you for the live streams, Philip. Thank you for being here. I'd be very cautious about emotionally devoted to Tesla. People are way too emotionally tangled with the investment. Learn from SBF. So I don't think it's about emotion with Tesla. I think it's literally the numbers. I think you look at the PE ratio compared to the other companies and you look at their growth. And it's a very, and I think Gary Black is the guy to follow on Twitter who really, he's unemotional. He's very unemotional. As he's one of those Tesla investors that is not a cult of Elon fan. He loves Elon, but he goes down to the numbers every single time. And so the numbers say it's obvious. I mean, the numbers say it's very, very obvious. And at these prices, it's becoming more and more juicy, but that doesn't mean that the market can't slam it, right? Especially in 2023, if we see something bad. Google has been reported to be thinking of laying off about 10,000 employees, which is, I think, 2% of its workforce, around about that, maybe a little bit less than 2%. But following in suit of what Meta did, laying off 11,000 employees. Now, there was also a rumor yesterday that Mark Zuckerberg is stepping down. I believe that rumor is false. It was reported by this website called The Leak, and a lot of mainstream publications took it and like ran it as news. But I don't think that's happening from my knowledge. So we're probably not going to see a Zuckerberg collapse of the Meta empire. Could you imagine though if Zuckerberg left? I mean, like if Zucks is gone, I don't know what the point of Facebook is. Like Facebook is literally, Facebook is Zuckerberg. Metaverse is Zuckerberg. So if Zuckerberg's gone, I think that now people say that would help the stock because you would get like a more fiscally responsible person. But the long-term vision of the stock is to not be a social media site anymore, right? The long-term vision is to like really build something magnificent. And I think you need someone like Zuck there. Tattooed Chef, $1.67. This one, it would be crazy if they go bankrupt. I don't think they would go bankrupt. I think they have enough to survive. But it's bad. Yeah, that one's got bad. That's a lot of money to lose on that one. Snapchat at 993. Nothing too crazy. We have got about 30 seconds away from the market open, and then we're gonna see how this all plays out. Theranos founder, I want to talk about that a little bit after the market open. Elizabeth Holmes was sentenced to 11 years in jail, and let's just say the jail she got felt more like a resort than a jail. We'll discuss some of the nicer things in life that she has been afforded, even though she's been in jail. All right, boom. November 23rd, 9:30 a.m. Thank you all for being here. All 96 of you means the absolute world to me that you're spending your morning with me. Here we go. The stock market is now open. Wake your ass up. The stock market is indeed open. Boom, boom, boom. Let's get into it. Zoom 75, Google 97, S&P 399.74, Team Atlassian 117. I was actually using this product last night. Roblox 3162, Netflix 286, Tesla 173, recovering from its all-time lows of, or 52-week lows of 166.19, now a market cap of 545 billion. UPS 183, Disney 96, recovering a little bit from its decline at 86, but still down about 40% year over year. Alibaba, we talked about this stock today on the Daily Cowbell. This was once a $300 stock, now down to $78. Baba and the Chinese government, well, the Chinese government has fined the Ant Group. Ant Financial was supposed to be the largest IPO ever back in 2020 for $38 billion. They fined them $1 billion, I think today or yesterday, which is just insane. I mean, like, The Chinese government is an interesting thing to be working with, and for a country that wants to be technologically advanced, if the best tech companies can't rise to power, it's going to be hard to see them try to ultimately get their footing intact. Amazon at $93, Target at $159, Datadog 72, Square 63, Square falling down from about 70 when it was trending up a little bit higher last week. Taiwan Semi at 82. This was a little bit more close to 90 when Warren Buffett got in. Bitcoin recovering to 16,300. It was at 15,700, and the dip has been bought. And I've always said, look, I think Bitcoin's going up. I don't think it's going to 1 million. Kathy Wood says this bad boy is going to 1 million by 2030. That would mean if there's 21 million Bitcoin and you've got 1 million per coin, if we do some basic maths, okay, basic maths, 21 million coins times 1 million per coin, the market cap of Bitcoin will be $21 trillion. Okay. And it's just like, well, that's like 30% of the like, that's just, that's insane. That's just unlikely, in my opinion, to happen. So I think Bitcoin's going to go up. I think it might even beat all-time highs, but I don't think it's going to 1 million. That's a little bit hard. Enphase at 322, Palantir 717. Palantir released a couple of new YouTube videos on their YouTube channel as well. Some Foundry keynotes. I was watching one of the ones they did with Lilium, which was a great one. Lilium is an electric jet company right now trading at $1.42. Lilium's an exciting company. The problem is it's a SPAC, and SPACs have gotten absolutely demolished. So we will see what happens. But at least they were saying that. Weren't you just saying you don't get crypto yesterday? Yes, and I still agree. I don't understand the fundamental value of crypto. However, I do think Bitcoin will go up because it's speculative, right? So like the people that are going to buy it, they're going to buy it because they're speculating on the price, which will push the price up. But buying it for some long-term hold because you think it's this phenomenal thing that's going to save the world, that I personally don't get it. I mean, and maybe someone can explain it to me, but I don't get it. Mark says, I'll say it. Well, let's see. All right. Now that we're talking about, we're talking about the macro economy. Let's talk about the holidays that are coming up. Let's take a look at a clip from CNBC on them speaking on consumer shopping patterns. Now, this matters because if consumers don't step up and shop the way they're supposed to shop, it's not going to look pretty going into January. A lot of companies are not going to make the type of money they thought they were going to make. But let's see from the National Retail Federation CEO what is going on. By the way, you notice how like National Retail Federation, there's always a national organization for anything. So like literally there's a National Retail Federation. There's a dude that is in charge of the National Retail Outlook. It's so cool. There's a thing for everything. All right, let's take a look at this.
Tell us what to look for. Give us the upside and give us the downside at this point.
I mean, the upside is that we're going to have a Christmas and a holiday season that looks more normal in terms of in-person gathering. I think people are going to be out there. I think this is going to be a busy Black Friday weekend. So you're going to have that, and you're going to have celebrations with families being together. We haven't had that in 2 years. What is different? We're going to see promotions like we haven't seen in a long time. Retailers need to move inventory. It's going to be a late Christmas, given that the Christmas is on a Sunday. So people feel that they can wait because they have that Friday and Saturday. Typically, when Christmas is on a Sunday, you get an extra 50 basis points to sales, and retailers are going to feel margin pressure. Good values for the consumer, but margin pressure for the retailers.
Matt, do you agree with that? And let's just talk about the margin pressure and just all of these deals. Is it a function of the fact that the consumer has less buying power than we thought? Is it a function of too many retailers buying up too much inventory in advance, thinking that consumers had too much buying power? What's the explanation?
Well, Andrew, I think your lead in about are consumers going to shop or they're going to drop. Our expectation is they're going to shop, especially beginning this weekend in record numbers. 166 million. That's more than we've ever seen. It's almost 10 million more than last year. And our forecast is 6 to 8% growth for the holiday season, which is tracking our annual forecast. I think that the issues of inventory have largely rationalized. There are some outliers there, of course, but late spring, early summer, we really had the headlines about what inventory levels were like. And when I talk to CEOs of retail companies in general merchandise, in specialty, across categories, I think they generally feel that they've got not too much, not too little. It's about right. but it's certainly not what we've seen the last 2 years when we clearly had too little and we didn't see shoppers out in the same ways in 2020. Last year, we started earlier and we really held full price. I think this year, as Dana said, there's going to be much more promotion. It's going to be more value driven because of inflationary pressures, and people are going to wait a bit longer than the last 2 years because they expect there are going to be better deals later in the holiday season.
This is actually something that was on my mind. I was thinking of getting a new computer. Well, I ended up purchasing the new computer, but I didn't. No, I bought the computer, but I went to Best Buy and I was like, hey, Black Friday's in 2 weeks. Are you guys going to reduce the price? And they actually have this deal where it's like, okay, if you buy it and the price is lower until January, you can switch it out. And so it's a pretty reasonable deal, right? They give you a lot of assurance to do that. So, but most companies are not going to do that, right? Best Buy is a very big company. So at that point, people are going to wait. And if people are going to wait, that could slow down purchasing.
Okay, so Dana, you know, I like a deal. I like a deal. So tell me, on the selfish side of where I'm going to get said deal and where the deals will be, tell me about that. But then also tell me who you think the winners and losers are in terms of the retailers themselves.
I mean, you're going to get a deal at the department stores. You typically always do get some type of deal at department stores. So Macy's will be up for that, and they're really positioned well this holiday season. You're not going to get a deal at the luxury brands, and certainly luxury brands like LVMH. They're selling at full price and goods are moving out the door. I also think that when we think about the retailers overall, where we're seeing some of the weakness, some of the teen retailers, given those teens basically don't have the same buying power as their parents. So they've been a little bit more cautious, certainly, in their spending that's out there. And I think the other place where you're going to get deals or you're going to get new product is anywhere where there's innovation. You look at On Running, Andrew. I don't know if you have On Running shoes, but you should get a pair because those are the popular shoes. You're going to look at Uggs, which has reinvented themselves with new platform shoes and their Hoka shoes that are out there. And I think you're still going to see cosmetics win. And I think Ulta is certainly going to be one of the winners there.
Right.
Ulta Beauty, interesting one. Oh, let's actually look at their stock. I know my sister used to be interested in that stock. Let's take a look at that one. For those asking for the Discord, I just put it in the description, or I just put it in the chat. Let me just pin that real quick. Ulta Beauty is at what? Ulta Beauty is 447. I'm gonna go to the max on this bad boy. They went public for $33 in 2007. Wow. Ulta's at like almost all-time highs. Oh my goodness. This is a stock that has not collapsed. Look at this. It collapsed in 2020 at 124, but since then, it's like broken its 2021 all-time highs. Wow. We should have all been in the beauty industry. You know how they say you can't run anywhere, you can't be safe? It looks like Ulta is where you could have been safe. Like it's either me or I'm looking at this chart wrong, but Ulta is the one place that was not affected over the past year. Right? Look at this thing. 124, and then it just goes up and up and up. And then 2020 November, that was the top for most stocks, and it was at 396. So it's still up. It's still up almost 10% since then. Wow. Hey, that's not bad. Ulta Beauty. All right. Well, that's Ulta Beauty. Let's go back into the markets. There we go. S&P 400. Boom. That was such a fail. I was supposed to ring the bell and it fell. But S&P 400. Woo! We are here, baby. S&P 400. I got to tweet that. You know I got to tweet that. I got to tweet. Is your sister interested in any other stocks for now? So she has a United position, and she's had a United position since 2020. So she's been in that position for a while. She actually is starting a new job, and her job is really stressful, and I know about it because she tells me about it. So she doesn't even have time to look at her portfolio, but she's nonetheless, she doesn't check her stocks anymore, but she has United. Just went to Ulta to get some sound stuff. Yeah, man, that's insane. But look at this, S&P 400. There we go. We're in the 400s of the S&P. That's good psychologically. Santa Claus rally. Do we see that coming by the end of the year? Look, it's hard for me to imagine that we go from 400 on the S&P to new lows. Let's look at the 3 months. The 3-month chart. This was the low, 348, October 13th. Boom. October 13th, if you bought at 348, you are currently up, if we just do 400 divided by 348, 14.9% on your investment on the S&P, 15% up in about a little bit over a month. To imagine the S&P is going to fall at 348 by the end of this month, it just seems like a very big stretch. That means the S&P would have to have a leg down of 15%, while Tesla is down more than 59% year to date, while Palantir has been demolished from $10 down to $7, right? Like, while a lot of these companies, like, none of these individual stocks have recovered. Disney is down. Enphase, for some reason, Enphase is the only one that's up. But, like, everything else is down. Like, even Roku it was at 67 for a while. It's still at 54, and now it recovered from 44. But, I mean, AMD, I know, was at 55, recovered to 76, but AMD used to be at, like, 110, right? So, like, a lot of these stocks are still down. It would be hard to imagine the S&P just collapsing in a month, especially if CPI comes in even at 7.6, bro, even at 7.5. Like, on December, you just can't imagine the S&P just getting destroyed. We got Gabe in the chat. Amit, stop. You have no idea about the technicals. Okay, so Gabe made a video last night. Gabe, I have not watched it yet, but he literally called me to say, hey, Amit, this is one of the most important videos of my life, where he talked about this. So if you guys want to, Gabe, make sure you link it in the chat as well. It's a 58-minute video, bro. Oh, shit. I was about to play it. 58 minutes. Okay, that's a lot. So if you have the time, there's 58 minutes, and that's Gabe's perspective on why the market is going to go crash. You say, I'll shut up. No, you don't have to shut up. That's your perspective. If you spend 58 minutes making analysis for why this is going to go down, I'm sure there's a lot of stuff in there that I have to consider. I am a little bit more naive saying, oh, we're at 400. Are we really going to go down 15% in a month? But especially because I just think CPI is coming up, and I think the holiday season is coming up, and typically that doesn't happen, right? Unless it's like a .com 2008 type of thing. But I don't think that's here yet. I think that could happen in 2023. Maybe the S&P could hit new lows in January, February, March. I just think in December, just like 2021 December, like we got to all-time highs on the S&P in December last year because just the nature of that sort of rally that happens towards the end of the year. But maybe I'm wrong. Maybe it really does collapse 15%. It's just hard to imagine it with CPI. That's my core arguments. Just Amit's thoughts and opinions. Oh, well, not financial. Yeah, I wouldn't buy the index right now is what I'm saying. I just wouldn't. I wouldn't also short it at this exact moment. Given, again, this is not me pulling it out of my ass. My argument is holiday season is coming up. Santa Claus rally, which just means more consumers start spending more, which tends to put some lift into the market. And CPI is probably going to be decent December 13th. If you put those three together, I don't see the S&P collapsing 15%. But it could happen. But those are my three hedges against why that might not happen. Even if the some so-called pros who do this for a living say there's a chance of no major crash, nobody really knows. That is indeed true. It's so crazy because we're all trying to figure it out, and it's like, like none of us know, bro. None of us know. Okay, let's go here. Weekly U.S. jobless claims. Let's look at the jobs report that just came out as well and interpret what that means for the market.
Jobless claims for the week of November 19th, 240,000. Definitely higher than we were looking for. That happens to be the highest level since the second week in August. 1,551,000 on continuing claims, which continue to aim higher as well. That is the highest level since the first week in March. And if we look at durable good orders, our October preliminary, it's up a much stronger 1%. That's the best read since June of this year. And if we look at transportation, it's up 0.5, which still retains a good chunk of that 1%. And that's a 0.5% better than we expected. And that's the best level since March of this year. If we look at capital good orders, non-defense aircraft, a proxy for capital spending, it's up a smart 1.3%. That's the second best of the year. The best of the year was up 1.4 in January. And finally, if we look at shipments versus orders, they were also up a smart amount. Shipments were up 1.3%, 1.3. And I take that back. Capital good orders, non-defense aircraft were up 0.7. It was shipments that were up 1.3. So all these numbers are quite exceptional. And we do see that the entire curve is higher in yield, lower in price, although we look at the longer dated treasuries and the dynamic remains the same. Yields there are up less than short maturities. And a couple of big issues, Andrew. Reserve Bank of New Zealand hikes a record 75 basis points, and all three metrics in the Eurozone on PMIs, manufacturing, service, composite, all still in contraction under 50. And like the US, the German yield curve, 2s versus 10s, nearly minus 20 basis points. That's the most inverted in 14 years, not quite the 40 years in the US.
Showcat said, someone get this man a teleprompter. Okay, so jobless claims at that point rise a bit. It's up 17,000. That makes sense because we saw layoffs, right? Google planning to do more layoffs. We saw big tech layoffs. The thing about big tech layoffs is it's kind of disconnected from reality because a lot of the people that get laid off from big tech, there's two options for them. They get another job at a smaller technology. So let's say you got laid off of Google, but you're a decent engineer, even if you're like a C+ engineer. You can probably get a job at a smaller technology company, not as big as Google, maybe not as many benefits, not as good salary, but you'll still get a job, right? Or you have enough savings because you made good money at Google and thinking, granted, you probably hopefully didn't spend it all on like a really, really expensive place to live or something like that. You have enough savings to last for that time. So you have some wiggle room. Or third, you just join a startup, right? So one of the reasons Brad Gerstner sent a letter to Meta Platforms saying, hey, you need to cut your workforce. And he didn't feel brutal about sending him that letter. His Altimeter Capital has a stake in Meta that's pretty big. His argument was a lot of this talent that you're going to cut are just going to go back into tech companies in startups. They're going to, instead of get paid $300,000, they're going to get paid $100,000 and have 3% equity of something that may become a really big company one day. And that's not a bad thing. The venture capital community has about $250 billion of dry powder sitting on the shelves. So what that means is that money is going to flow into little startups. Those startups are then going to take that money to hire engineers. A lot of new ones are going to start because a lot of them start during recessions. In 2008, Uber and Airbnb started. And the people that get fired from tech companies are going to be able to get jobs. What matters is when people from restaurants, from blue collar jobs, factory, when these things start going down, which is what happened in 2008 with the automotive crash, which is why we needed to bail out Detroit. That's when it gets really bad, right? That's when it's like these are people that can't afford food and they can't afford their paychecks, right? They're rent. Tech companies is a little bit more disconnected from that, in my opinion, just given the nature of the way tech companies operate. So it's going to be interesting to see how that actually happens long term. In terms of layoffs, Americans have the most debt ever. This is also true. There was a chart. I saw this. I can see if I can pull it up, but there was a chart here that said Americans' credit card debt is skyrocketing to the most ever in history, which means disposable income is minimal. I have no credit card debt. I never like the idea of having credit card debt. If you ever use a credit card, I pay it off immediately. I never buy things on the credit card and then I kind of just try to keep a mentality to not have credit card debt. But obviously, I don't have a family. I don't have like a wife and kids and stuff. Other people that have things that they need to buy on credit, that debt has been going up. So the disposable income is going down that much. Saw more videos that Palantir live event and what Florivia showed with the data architecture. Yeah, Palantir put up a lot of more live videos as well. Hey, Amit, what is Cathie Woods buying recently? What's your take on their positions portfolio? That's a good question. Let's actually pull it up right now. ARK didn't buy anything crazy yesterday. So let me pull up Twitter. CrowdStrike is still hiring like crazy. Well, cybersecurity is not a joke. I mean, cybersecurity is a real thing. That industry is going to be. That's the thing about tech. Like the demand for it is not going away anywhere. So it's like if the demand's not going away anywhere, these jobs will just shift to other companies, even if they're not the biggest. Again, remember, like Google and Facebook don't need that many people. They just want to hoard those people so they don't go work at the next Google. Right? Like if you create a better search engine than Google, which sounds crazy, but this is how, big Goliaths all end up falling. Some small kid has a dream and a vision and they work really hard and they end up beating them. If you just pay them and you subsidize their dreams by giving them a fat salary, then you never have to worry about it. And that's what a lot of tech companies have been doing. So ARK has sold a lot of stuff yesterday. Nothing too crazy. But the day before, she bought 7 million shares of Ginkgo Bioworks, which went under $2, by the way, yesterday. bought another 160,000 shares of Woozy, and then bought 176,000 shares of Bitcoin Investment Trust. Primarily because she believes that Bitcoin is going to $1 million. Startups are relying on venture capital. VCs will become more scrutinizing when risk-free rate is higher. SV is not immune. I agree on that. The only thing is they do have a lot of money. Like, for some reason, these venture capitalists have a crap ton of money. And I don't think they're going to be putting it into crypto as much as they were in 2021, given the FTX collapse. So at least in seed stage, I think that like 1.5 to 2 million is really nothing for a VC. It's the growth rounds. I was actually looking at a chart on this. The average Series B was like 45 million in 2021, and now it's like 26. Series A was like 25. Now it's like 12 or 10, around that much. So the growth rounds where you already have product market fit, and now a company is just trying to see if you're, the next Canva, the next Airbnb, which means they're not taking a bet on you. They kind of know you're going to be, but they want to establish a real equity position. Those rounds have absolutely slowed down because risk, rates have just gone up. Here's another fun fact. The VIX hasn't been this low since 2005. Just realized your thumbnails are nearly the same. Love it. Yeah, I got the idea from Meet Kevin. He just takes a picture of himself. I'm like, okay, that'll be at least for the thumbnails. But that's a good point, Gabe. The VIX is Gabe just keeps coming with all these different stats, and it's like all these stats kind of keep proving that we might see a leg down. Okay, I want to see the I want to see if I can pull up this video. Okay, here we go. So we've got ARK, Kathy, speaking of her, speaking on Bitcoin. So glad your startup is happening in the environment. You're going to be ironclad. Yep. I mean, that's a lot of people are like, why are you starting a startup when the economy is crashing? It's like, number one, if I was able to raise money when the economy is crashing, it means that there's some merit to this idea that people are vibing with. They want to take a chance on it. So if I can communicate it in bad times, I think I will be able to communicate it in good times. But number two, it's like, if you can start in this and we survive the next 2 years and keep going, we're going to be able to, anyone could survive 2020, 2021 because liquidity I saw startups that got funded. I don't want to name names, but they didn't even have a product and they got $5 million, and now they have to justify a $30 million valuation. It's like, good luck, man. Justifying a $30 million valuation in this economy and you have to raise a valuation after that, or you're going to have a down round. It's just not that easy. So if you start in a bad time, really the only thing you can do is try to keep going up.
Kathy, that you're going to hold to your Bitcoin forecast for, $1 million per coin by 2030. That still feels good to you?
Yes, and you can, sometimes you need to battle test. You need to go through crises to see who the real, to see the survivors, first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this? And once they actually do the homework and see what's happened here, I think they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop, because they'll understand it more.
One major exchange.
Well, $1 million, $1 million, everybody, $1 million. I would date her. She can get back into Palantir. Bro, if I dated Kathy Wood every day, I would be like, honey, I know you said you don't like Palantir, but let's watch this Amit video. Maybe you'll change your mind. Every day, I would be just inundating her with this, like, hey, it's like if your wife doesn't want to go somewhere or something, and you just keep nagging her about it. Be like, Kathy, Palantir, it's it's a nice company. But that's insane, bro. That's insane. All right, so that's the major stuff. Let's take one last look at the market. Nothing else crazy has been happening today. Elon Musk obviously has been, twittering as well. Look, Twitter's not dead. People thought it would die. Twitter's not dead. Look at the S&P. Boom, above 400. 401. 401 on the S&P. That's a tweet. That is indeed a tweet. The S&P is now above 400. This might be the biggest rug pull, or this might be a sign of something going forward. We don't know. we are going to see Roblox is up, Netflix is down, Tesla's up really, nicely up through about 4%, better from its lows of 166, ARK 35, Meta 111, Meta doing well today, CRM 150, Alibaba 77. Yeah, nothing too crazy outside of that. Roku 55, Robinhood 9, Palantir stuck at 727. Our beloved Palantir is stuck, but the rest of it okay. And Ulta, I think that was the biggest realization. Also, you guys have been doing a bad job. You did not remind me of the word of the day for the past 2 days. Okay. You did not remind me of the word of the day. And so I said, hey, you got to remind me what's the word of the day. The word of the day today is, what's the word of the day today? Let's do the word of the day is okay, it's going to be a basic one. It's going to be unknown. And the whole concept is you have to embrace the unknown. So there's 2 things to this word. A, will the stock market go up or down based on the S&P now hitting 401? It is unknown. It is unknown. Are we going to go up or is this going to go down? We don't know. And in general, in life, I actually, on my daily MVP on the Daily Cowbell, that'll be out in about an hour, I read a little bit of poem for my daily MVP, and it was all about the concept of embracing an unknown thing. So unknown is our word of the day. But this market is very unknown because, again, some of these stocks are just being demolished and the index is rallying. That's been the thing that's been, and the 2-year, 10-year are still inverted. Like you are getting more money from the government to take as a percentage return in bonds to take less risk. That does not make sense. That's not how it's supposed to be. The more risk you have, the more time horizon, the more money you're supposed to get back as a percentage return. That's not happening. So, we've got a lot of indicators that are just like showing a wacky market. And we're going to see what happens. Good opportunity to short here. Maybe puts on the SPY are worth it. Maybe it's not. Maybe it's just going to keep rallying. So we're going to see. All right, everybody. Let me ask the last one. Where's this healthcare contract Palantir is after? So it was supposed to be announced in November. I guess it's not being announced. I read some articles that it's getting close to a decision and the NHS has been working with Palantir. I think they're going to get it. Maybe I'm wrong, but it seems like all signs are pointing to us getting this contract, which would be great, not even for the money, but just to establish us as like the main platform as an operating system in the UK. We've expanded our presence in UK. We have a lot more employees in the UK. So it'd be hard to imagine we don't get the contract, but we'll see. We will ultimately see. Okay, that's it. Thank you everybody so much for joining. I will see you later today in some more videos. I'll probably do market close at 3:45, so you can meet me then, and we'll see how the market's going. Thank you everybody. Appreciate you. See you later.